This is our Forex blog for March 10th, 2011. And like most days, we want to see which currencies are strong, which ones are weak, which ones have the real-time strength, and which ones have the real-time weakness. The dollar had gotten really strong last night, and the weekly trend also was up and went really strong here at 10 o'clock Eastern Time. Unfortunately, the monthly trend's down, but occasionally that happens. Monthly trends switch slower than weekly trends, which are slower in flipping than daily trends, which are slower in flipping than the real-time trends. But so the dollar was strong coming into today, and you want to trade that against one of the weaker ones. The yen's extremely weak, but last night it had strength. You never want to buy a strong one versus another strong one. It's a total waste of time. This is what the dollar-yen chart looked like last night around coming into midnight. Up, down, up, sideways, false breakout, up, down. It's just extremely choppy. And choppy price action, very few people can make money consistently in choppy trends. And it's going to be choppy when both currencies are strong. And same thing, you don't want to sell two weak ones. The weaker one will cause the direction of the move. Obviously, the dollar was stronger than the strong yen, and that's why it inched its way up. So really good scalpers could have made 5 to 10 pip moves a couple times, but most people would have had real trouble. The Australian is weak on all time frames, and last night you can see coming into midnight was one of the weaker pairs. So the Australian dollar coming into midnight is a great one to be looking for sells. You can see again that the daily trend's down, the weekly trend's down, the monthly trend was just slightly up. It switched to down today, and it was underneath the monthly pivot. That's the average price of the previous month. Just like our hourly is a rule of thumb guide, above the hourly you want to focus on buys, below the hourly you want to focus on sells. As you can see, when it broke underneath the hourly, it trended down. Same exact thing goes for the monthly pivot. When you see the monthly pivot on your chart and the price is underneath it and can't get above it, it's a pretty big sign that the trend's going to be down. And our currency meter showed you that the Australian was weak and the dollar was strong, and so you might have gone short here, or when it made a lower low, sold the next move up. Notice intensity on the way down, no strength on the rally back up. You draw your trend line underneath the bar's low, and you go short right there with your stop right above the hourly moving average. And it just continued, and you had unbelievable intensity. Basically, that's telling you that all the Australian pairs are just falling like a rock, and dollar's getting strong. And at that point, you really want some kind of a pullback up to get short. I wouldn't consider this enough of a pullback, but this is our second main entry method. You have a trend, and either you get a pullback up like you have here. This is a pullback trade. We made lower lows. All the reasons say sell. This is the most weakness it had in about 10 hours, and that's a pullback trade. The other type of trade we take is a sideways consolidation for at least half an hour, and I prefer 2 and 3 hour trades. In this case, it went sideways for half an hour, maybe 2.5 hours. When it broke down right here, even though it's underneath the lower containment band, it's likely to go to the next support area, which is right down here at 20. You're going to risk 5 or 6 pips to make 15 or 20 if the trade works. And it did. It came down. There was less momentum the way down, and also when currencies get underneath the lower containment band, they usually have some kind of a pullback trade. So you're quick to get out of your trade, and you have a nice little move up, pullback, move up. You can see the ways up are very little compared to the moves down, and when it breaks this trend line here is another place to get in. Now, I probably would have exited it right here because there's not that much weakness, and probably missed out on the remaining move. But if you're a longer term trader and you want to hold this move for the fib target of this first wave, that's all the way down here, and this it's also the whole number. This is likely the max low of the day. It's also our fib target. So this makes a wonderful place to get out of that trade. If you shorted this up here around 40, you made about 40 pips, but just had to hold for 5 or 6 hours. Later in the day, the pound became just incredibly weak. Unfortunately, the weekly monthly trend are just slightly up in this. But strong dollar, weak pound. It doesn't take a rocket scientist to know that the momentum is on your side. Notice also prices underneath the hourly, it goes down, pulls back up to the hourly and can't get above it. We have a 20-day average price here, and we also have the monthly pivot like we just showed before. This is the average price of the previous month. Underneath that, it's more likely to go down. Above that, it's more likely to go up. So when this came back up and wasn't able to get above the hourly, wasn't able to get above yesterday's high, it makes a great short. And you can see, the price just, fell like a rock. And one of our new tools, FX Momentum Pro, shows you on a bar by bar basis what's going on with all the pairs. If you see, instead of watching a bunch of other charts and where is that? And seeing whether the pound's getting weaker across all those charts, this really lets you see that. It also lets you see on the way up here, how strong the pound is. There was a brief amount of strength right here in the pound, which carried on and carried it up. Not a whole lot of intensity except for right here. But as you can see, it went above the hourly, then came down. And on this bar right here, just incredible weakness. So, if it breaks down underneath this pivot, it's very likely to continue its trend down, but you want to watch this in real time to see whether, it's going to happen or not. Boom, breaks down, a lot of momentum here, which is telling you that all the pound pairs are going down, dollar pairs are going up. Boom, and what that's telling you is that it's likely to make a lower low the next bar or two or three. Within the next 15 to 30 minutes, price is likely to be lower. So if you're short, your odds of making money are higher. And look, the momentum is there. In fact, this is the most incredible weakness of the pound and strength in the dollar that we've had since way back in the beginning of the day. It's been, in the last 7 hours, this is the most intense down move you have. So it's probably pretty likely at this point to come down to the lows down here. You're probably going to make another 14 pips on your trade. You're short at 60, probably going to get out at 30 and make 30 pips. Now, usually when volatility increases, you see after 1 or 2 or 3 red bars, a big spike in the green bar. You really want to see what happens on the next bar. If it goes sideways and doesn't take the high out, you want to stay in the trade. If you see it go sideways without much strength like this, you want to hang on and see what happens on the next bar or two. Alright, so that's exactly what happened. It went sideways. This is telling you other pound pairs are slightly going down. Dollar pairs are getting slightly stronger. Still pretty likely to go lower, but if it goes sideways another bar or two, I'd exit at least half the trade there with a small profit, 10, 15 pips. Alright, I would have probably exited half the trade here. My stop right up above the level here. And sometimes, if you're expecting it to come back and retest the monthly, but it doesn't, you just, if it breaks the low here, you'll get back into that other part of your position. Let's say you did a 2-lot trade short here, and you got out of half of it here, and it didn't really pull back up the way it did before. There was incredible weakness there. You can always add that lot that you exited half of back on when it starts to go down again, so you have your full position. And if it continues up, and maybe you get stopped out at break even on your second half, you don't lose anything on your original position. Alright, so you're short again here, and again, it's very likely to go down to the lows here. It's only got another 5 pips. Alright, it didn't explode down too much on this next bar. I'd probably exit my trade here. So, short around 65, out at 30, something for about 30 pip profit overall. We made 30 pips on the whole thing. We got out of half with maybe 10 pips on that. We added it again and made 20 or 15 pips on that second entry. Again, the market's right at its lows, and usually I don't like to sell the lows here, but you can see the momentum is definitely the downside. It's the most momentum of the whole day, and as it's going sideways right here, there's been a few green bars which say that the pound against some of the currencies is slightly going up, but it's not going up much, nothing at all. And dollar pairs aren't getting weaker, they're still strong. And so if it breaks, a half-hour sideways rectangle entry pattern, I prefer, again, pullback trades like this. But, this is very likely to go through the low because of the momentum here. And if you do short this, you better see a spike bar up, or you want to get out of your trade with a tiny loss or a break even if you can. Alright, so it went down. You didn't see that spike bar here. So I'm a little nervous on this trade, but I'm also not risking much. I put my stop right above, these bars highs by 2 or 3 pips. Boom. Alright, so it's underneath the lower containment band, but we have incredible momentum. I'll see what happens on the next bar. 6100 is a whole number that he's usually buying there. We're short somewhere up here around 25. We're up 15, 16 pips so far. We'll see what happens on the next bar. It should make a lower low. Should come down to 6100 and probably stall. Alright, so the low of this bar, is around 6105. It's kind of running out of momentum. My profit target's only another 5 pips down. So I'm probably going to get out of the whole trade here. Usually when they're underneath the lower containment band, they reverse back up. So I'm happy with a trade that I normally in the past never took, but now made about 20 something pips on, because we see the real-time momentum. And it could go lower, but it's underneath the lower band, and I'm not going to be greedy on this. It's also coming up to the fib target of the first wave down. In fact, it's the 1.618 fib target of that first wave down, which most of the time, probably 70% of the time, is the low of the move. Occasionally it goes a little bit below that, and then it rips back up. So let's see what happens. So it did, in this case, it did continue on lower, and I would have missed out on those extra pips. But most of the time, you're never going to go broke exiting a trade at the 1.618 fib target in a whole number. But you can see, as this went sideways again down here, when it did break down, you had incredible momentum to the downside. As this thing broke right here, if you got out of that trade and you see it breaking and you want to give it a shot again, I have not yet done this with this new tool. We've only had this tool for about a week. I do not like to sell underneath the lower band. I rarely ever do it. You could always take this trade with a very tiny position. If you normally trade, let's say 5 lots, you might do 2 lots short because the risk is higher. But this is certainly showing you the momentum's down, and of course the next bar makes a lower low, which is oftentimes what happens after you see a spike. So even if you took that risky trade right here, you made 15-20 pips on a super risky trade that never in a million years would I've ever taken in the past. But we can, with a much higher odds, take these kind of trades now.